Hello student, welcome back to IBS. Today we are going to start a new session in which we are going to learn about balance sheet overview in detail. We are going to learn about every single item of balance sheet. So let's jump to the topic and see what are the things we are going to learn. So as you can see in balance sheet, whatever things are available in balance sheet, we are trying to cover as an account receivable, inventory, investment, PPE, intangible and other asset, okay, valuation of liability, accounting for income taxes, okay, and honor equity and revenue recognition, okay. So these are the things are very important, and if you cover all these things, I think you are almost done with every single line item with regard to balance sheet. So this session would be very detailed if we talk about account receivable. So we will not learn about the definition of account receivable and how to book account receivable into these are the things I'm expecting you guys should know, and I'm trying to give you detail about what are the thing as a finance manager or finance director if you are going to finalize your account and closing your books of account. So what are the things you need to think, and what kind of adjustment, how you will take bad debt entry, how will you reconcile your allowance of doubtful debt account. So all these things how you are going to manage. So this one we will be discussing. Similar concept will be applied to inventory. Okay, here we are not learning about the R2R related general entry or invoice booking related accounts payable entry. Now we are learning advanced level, so we are going to learn with the perspective of how to finalize balance sheet. Okay, so let's jump to the topic and understand it. Okay, so now we are going to learn about account receivable. So as we know what is account receivable, whenever we sell particular product or service, for that we either, if it is product, we will be giving product, so that inventory will go from our side, and then in return they will give us promissory note, and that is called sales invoice. They will accept, and that will be our account receivable. So in future we will be receiving. A second way is if they are receiving my product and simultaneously they are receiving my invoices, so that time also account receivable will be recognized, and as well as cash entry will be posted, so that will be nullified. So these are the things I am expecting you guys are already knowing. Just understand few things. Account receivable are recognized when sales is recorded, okay, except when the payment is received. Okay, other way also to receive account receivable, for example, you have raised the bill, okay, in advance. So that time also we debit AR and to customer account and credit to deferred revenue for advance billing. Okay, if it is for longer, it will go to long term liability. Okay, if it is shorter, then it will go to short term liability. Okay, we are not here to know about the deferred revenue kind of stuff, revenue recognition related stuff. We will be learning into that particular chapter in detail. Okay, so now our concern is only account receivable perspective. Okay, so now we are learning with regard to time of recognition. When you are delivering your product and when your customer is receiving, when you can say that you have delivered the product, okay, you have authority and rights to recognize your account receivable. Okay, good in transit, if product is in transit. Okay, let's see what they are saying. Key issue determining whether the records item in transit as a sale or keep the item inventory depend on shipping term. Okay, when you have factory and your client factory, okay, so from your factory it is going out, that is called transit. So at that time we should recognize account receivable or not, or at that time we will recognize. So that purely depend on your shipping term and condition. So let's understand about the shipping term and condition. Pre on board, what does it mean? Recognized timing. Revenue and receivable are recognized when goods are delivered, okay, at the carrier. Okay, so it means to say maybe there is some thing which is called carrier, okay, the port or whatever place. When you deliver that place and you receive the receiving that you have delivered this, at that time you can recognize your AR. Okay, and the second point is, that is also you can see free on board shipping point. Shipping point is your carrier point where you need to drop your product. From there onward they will take care. Okay, and free on board destination, now they are talking about the destination, exactly the location where the factory of your client has, okay, or your buyer has. If that place, if you are delivering based on your shipping term and condition, you have to deliver there, okay, at destination. So then you have to recognize revenue only when your goods are reached to buyer. Okay, at that time you will be recognizing. Okay, even though you are shipping your product through carrier and through the person who is taking your goods here only, and then they are delivering here. Okay, but still at that time you will not be able to recognize. Okay, you will not be able to recognize because of your shipping term. Okay, it's so account receivable recognition are purely based on your shipping term. Okay, there is two term only: free on board shipping term, okay, and free on board destination. Any of two, whatever your term is, based on that you will recognize your account receivable. Okay, now there is another point which we need to understand. That shipping term and goods in transit point of view, goods will be recognized based on shipping free on board shipping point or free on board destination point. Okay, this is goods perspective. Okay, and now if you talk about revenue is recognized when the ownership of inventory being transferred. Okay, so along with these goods you have ownership. Okay, when you are selling you have ownership of that particular goods. When you transfer this ownership along with your invoices or whatever it is, you are giving them that you have sold it. Okay, so when they will, your buyer and customer will receive this ownership. Okay, so then their damage and their absolute everything is their responsibility, along with they have ownership. Okay, so when the ownership will transfer, then only you can move your from balance sheet inventory section, from inventory to income statement. You can recognize your revenue, okay, whatever amount, and simultaneously you can recognize your AR, and your inventory will go to your cost of goods. That will also be whatever amount it is. So inventory will move and AR will be recognized at the time when you transfer your ownership. But AR you can receive based on free on board destination or free on board shipping point, whatever the point you have. Okay, so how company is falling, there may be slightly differences you will find, but I am trying to tell you overall understanding. Whenever you have sold some kind of product, or whenever as a buyer if you have received anything, you need to pass entry, right? So for that sometime company use we can say goods received related GL. Okay, so these are the GL, different point of view you will see different name, but there are ultimately there is goods received GL. Sometimes we say it GRN. So these are the GL are available in all the company to maintain all this kind of activity. Based on the chart of account, company may different GL also based on their different requirement. Okay, I hope it is clear to you. So thanks for watching. See you into the next session. Stay tuned. Thank you very much.